So on average, about half my clients that I jump on a call with initially to get pre-approved for a home loan, they'll ask me if I could do a soft credit pull instead of a hard credit pull. So while yes, we could do a soft credit pull, I wanted to just take a minute and explain why a soft credit pull sucks and why it's really important to allow the lender to do a hard credit pull. So there's two issues with a soft credit pull. And to back up a minute, a soft credit pull means the lender pulls in your credit, but it doesn't show up as an inquiry. Hard credit pull means that it shows up as an inquiry and your scores drop about a point or two. So issue number one with the soft credit pull is that it only pulls in 2 of the 3 bureaus' scores. So let's say, for example, you do a soft credit pull, you have one scored a 720, the other one's at a 680. But without knowing that third one, we don't know what the middle score is. And all of the qualifying and guidelines are based on the middle score, and so is the pricing. So Fannie Mae and Freddie Mac, known as the agencies, they have what's called loan level pricing adjustments. It's based on credit score. So the higher score, the better the rate, lower the score, the worse the rate. Without knowing that third score, you don't know what that middle score is, and your pricing could vary depending on what that third and final score is. The bigger issue is that part of the qualifying process is running your file through the automated underwriting system. There's 2 universal automated underwriting systems, one Fannie Mae, the other's Freddie Mac. All the mortgage companies use these 2 basic automated underwriting systems. Well, with a soft credit pull, we can't run the file through the automated underwriting system. So we don't even know if we have an automated approval for you. So imagine going under contract, you find the perfect home, only to find out that your pricing is way worse and your payment's much higher than you expected. Or even worse, you're not even qualified for the loan to buy the house you're under contract for. That risk just simply isn't worth the 1 or 2 points to your credit. And side note, a lender can take your credit report. Let's say you're on the cusp of getting a certain price or on the cusp of qualifying for a certain program. Your lender can take your credit report, run it through a simulator, and tell you what you could pay down or pay off to drive your score up to get that desired program or price. So often my clients will end up with a higher credit score at the end of the transaction because we talk about what they can do to drive their credit score up. If you're a serious home buyer, you really want to purchase a home, let your lender pull a full credit report so that they can determine accurate pricing. They can tell you what you can do to drive your score up. And most importantly, they can confirm that you'll get approved for the home loan. And if you're not that serious about buying a home, that's where it makes sense not to have your credit pulled at all. Just tell the lender what you think your score is. Your lender can tell you about what the rates would be, and you can just have that conversation about what numbers would look like. But when it comes to actually getting pre-approved and going shopping for a home, it's super important that the lender pulls a hard credit report for you so you know exactly where you stand.